Dollars plus expenses. 47.8 billion is the headline of the news release that has come out. So let me look here to try to get a per share loss. 33 cents a share, exactly what analysts were looking for. 33 cents a share per share loss for Citigroup. Tier 1 capital ratio of 11.7% comes in for Citigroup, which again reports these managed revenues, as it puts it, of $91 billion plus and expenses of $47.8 billion. So the net income number for Citigroup, the net income number is $14.7 billion. But once you work through everything, you're looking at a loss, it says, of 33 cents a share. Now, obviously, because of the credit losses and whatnot that came in, there's $7 billion in credit losses that were reported in the last quarter, and its assets declined at Citi Holdings at least by $70 billion, so they're down to less than $550 billion in assets there. They lost $70 billion in assets at Citi Holdings. It says Citicorp. Remember, some time ago, the company had been split into these two units, and the Citicorp fourth quarter revenues $11.7 billion, so that's down from $13 billion the year before. A lot of numbers that we're throwing at you, but it looks like, at least at first glance here, that Citi's results, no earnings here, lost money, exactly as they were expected to. 33 cents a share loss. 33 cent a share loss was the expectation. All right, we'll look through it in more detail. The stock's up 1 penny on the news so far, so I'm sure it's very, very actively traded, as it often is. And we'll bring in Todd Schoenberger for an instant audit from Landco Trading. Todd's in San Antonio. We also have Yuri Mann, who follows the financials in Fort Lauderdale. And I'm going to bring back Arindam Nag in a moment from Dow Jones Newswires. But let me start with you, Yuri. They lost exactly what they were supposed to lose, 33 cents a share. Is that good or bad news?
You know, I think it's just bad news. These losses are horrific, and this company doesn't have, any good prospects in terms of growth. They have a lack of innovation in terms of their products. And if you just look at it, I mean, the amount of credit card debt that continues to go bad is going to increase. I was reading the FDIC expects somewhere between 700 and 1,000 bank failures through 2012, and people are just going to continue to load up on credit card debt when they can and not pay it. So it's going to hurt Citi, and the mortgages continue to be underwater, and that hurts their business in general. So, I don't see any good prospects for this company, and even though they met expectations, those expectations were pretty horrific.
It looks like the revenue was light. 17.9 billion, I believe, is the revenue figure versus 18.4, which is the expectation. Also worth pointing out that the loss, if you take out the TARP repayment, I don't know if you would actually do that, but if you take out that and you take out another loss-sharing agreement that they had, then it's a 6 cent a share loss. However, the first number that came across was 33 cents, exactly what analysts were expecting. Yuri says, all right, that is not great news. Todd, let me go to you for a moment. What's your take here early on the Citigroup figures as you've heard me read them?
Yeah, I completely agree with Yuri. I mean, when you look at a 33-cent loss, is not good news. I mean, here you have a company that continues to be challenged by the economic environment and also the environment, or the economic environment of its own customers. I mean, they don't have new clients that are coming in. They lost, how much was it, $70 billion, you said, in assets? I mean, that's horrible for this company, and that should be their bread and butter right now. You're losing assets, you don't have the deposits, and now you have the risk of all these other loans going bad. I don't see the prospects, or I don't see a bright future for this company at all. I would stay away from this stock right now. I'm surprised it's not selling off in pre-trading right now, but we may see that when the market opens.
But it's only down by 4 cents at $3.38 a share. Arindam Nag is also in the studio with us from Dow Jones. You guys stand by for a moment. Arindam, one of the things here that Citigroup is saying is about the TARP repayment, taking a $6.2 billion fourth quarter after-tax loss on TARP repayment. So here's Citi with all the other banks talking about how they've already repaid TARP, still talking about that.
I think compared to the other panelists, I got 30 extra seconds to process information. And I must admit that I don't think the results are not as bad as I actually initially thought. And here are the two things that jump out. One is that it is genuinely reducing the size of the balance sheet. If you look at its Tier 1 capital ratio, if the denominator is falling, and if the Tier 1 capital is exactly the same, which means that they are giving some incremental capital somewhere. And the second thing that I think which will come out of the conference call is that I think they're getting deposits from non-U.S. countries. I know this trend was noticed in the third quarter, and I would like to see whether they're actually building their franchises in EMEA as well as in Asia.
I don't know if you would agree with the superlative use, but it seems like your Citigroup's CEO, Vikram Pandit, in the release, of course he'll make more comments on the call, said, quote, we have made enormous progress in 2009. So you think they're going in the right direction as the laughs come in, as slowly as that direction might be developing, kind of, so to speak?
I think if Vikram Pandit can convince us that the bank can make progress without selling further assets,
right,
and if they're able to repay top money over the next couple of quarters, that'll be a huge leap forward.
All right, raise your hand if you were laughing. Was it Todd or Yuri? I think it was Todd. Was that you laughing?
It was me actually.
Yeah.
It was Uri. I just wanted to hear if you could ask your last
you're,
guest if he's a buyer.
You're well, he's a journalist. I doubt he's a buyer, but you want to, what would you say to someone who's thinking about the stock? Well, I'll get back to you guys on the stock price in a moment.
I mean, don't forget that Citigroup stock has actually gone down from above $4 to $3.40 in the last few weeks. But if you look at, if you put it into context against what we saw in JP Morgan, I mean, JP Morgan's retail banking wasn't really that good last week, and I think Citigroup we thought it'll be worse. Now that hasn't happened, at least so far, based on the numbers.
Citi talking about how it's strongly capitalized and significantly more efficient. That's the company's words. All right, Yuri and Todd, I got to get back to both of you guys, the chucklers as they are now this morning. Yuri, you go first. What did you want to say?
Well, I was just, I was saying, your most recent guest, he was saying something, quite positive about, the earnings. They look really negative to me, and I can't imagine even dissecting them the way he did that anyone would be a buyer based on what he said.
Right.
I think the only way that for this company to do well is for really the entire economic environment to change significantly, and for consumers to become more friendly. The whole paradigm has shifted where, materialism, consumerism is one of the 7 deadly sins here. So this company doesn't have any good growth prospects going forward. The only way I could see, something like this happening, maybe a Forbes proposal where, we start selling green cards so people will come in and buy homes for cash to foreign investors to prop up the housing market and change the whole situation. Maybe that would change the situation, but and help Citi. But otherwise, I just don't see any positive prospects for this company in the next 12 months.
How about you, Todd, in terms of the progress that, well, I guess Arundham has talked about, but also the Vikram Pandit talked about in the year 2009, that they're going in the right direction. Arundham talks about the balance sheet getting smaller and these types of things. You don't think so?
Well, that's why I was laughing, because when Vic Pandit comes out and says that we've made a monumental success, or whatever the exact quote was.
Enormous progress.
Enormous progress, okay. And you're still reporting 33 cents a share loss. I don't see where that's coming from. I mean, the point is that when you have a company like this that, like Yuri was saying, has 0 prospects out there, 0 growth. They're not giving out loans. You need a FICO score of 800 just to give a credit limit of $500 there at Citi. They are not giving out loans. Nobody's borrowing from them, and the people that do have loans are actually defaulting on them. When you see that kind of risk out there, why would you ever invest in this stock? Stocks at a price less than $5, there's a reason for it, and that's because this company is diseased right now. I would stay away from it. I would wait till it goes lower if you want to buy it, but then you're just gambling anyway. It's
going a little bit lower again this morning, just in case anybody's just joining us. Citigroup reports a 33-cent a share loss. The stock, which was at 342 yesterday, is at 330. Or I should say Friday is at 337 right now, so it's down all of 5 cents. Arundham, I guess I'll go back to you. It seems like these guys think that you're the odd man out here, or are kind of on your own island and thinking that Citigroup, well, I guess you and Vikram, thinking that Citigroup is making progress. You've had a chance to look at least at the first couple of paragraphs of the release. You're buying, it sounds like, a little bit of what they're saying.
But look, I mean, there is no doubt that there has been some progress. If you look at the operating expenses, I mean, the full-year operating expenses declined 31%.
Right.
Now, for Citigroup, mind you, the way, if you look at its size, if you look at its sprawling empire.
You don't think they should be further along than where they are now?
It's a bit difficult because, mind you, they had to look over the shoulders, they had to deal with the government, they still have the government stake in this group. It's not easy to pick up an asset and say we're going to sell them. Now, that said, it has made 14 divestitures in the last 1 year. It still has option to sell off its remaining wealth management venture to Morgan Stanley. I mean, if it can come out of this credit cycle without selling Benamex in Mexico, without selling its operations in Europe, then I think Citigroup, on the back of its global franchise in the Middle East, in Asia, does have a chance of turning around by middle of 2010.
Middle of this year. What does turnaround mean, by the way?
Well, the thing is, it can at least start talking about a potential dividend by the end of this year.
All right. What do you guys think of that? Does anybody want to? Yuri, you take it first. I mean, middle. I mean, that's we're really beginning of the year. So middle. What do you think? Middle of the year. Big ifs.
Those are big ifs. Big ifs. I predict losses all the way through 2010 for this company, and those are really big ifs. If they happen, all to Vikram, great for him. But I don't think the company's made great progress, and I don't see any positive outlook for this company at all.
What about you, Todd, in terms of what would you say about Vikram Pandit, the CEO, who inherited, by the way, in some degree of fairness to him, an absolute mess from his predecessor? What do you say about from Mr. Pandit?
Yeah. And it's still a mess, but here's the thing. This guy is a challenging environment. You're looking at, 200,000 global employees over there at Citi right now. I mean, he has to actually turn the tide. I mean, the morale, they have a morale problem there. Everybody's down in the dumps, and I would be too if I worked there. I mean, everybody's calm. They hate Citi. They hate the banks. The best thing that they have going for them, and here's the sad thing, because this was a Chuck Prince deal, was that they committed to all these sponsorship deals. They're a part of the BCS game and the New York Mets Stadium and everything else. That's probably the only good thing that they have that's going on for Citibank right now, and how sad is that? And the logic that this company can recover is completely based on a recovery in the U.S. economy, and that means the U.S. consumer. And when you have double-digit unemployment, housing values that are worthless by the day, and defaults going up, I find it hard to believe that a company like Citi is going to recover anytime soon. It's going to take years for this company to get back on its feet.
A loss last quarter, 33 cents, exactly what was expected. Todd, Yuri, Iron Dump, thanks to all of you for joining us as we break those numbers down live.